a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to hear now more about some of the best new ETFs from our ETF Research Director, Nina Mishra. And when we say new, we're talking like in the last year, right?
2019. So in 2019, we saw 256 ETF launches, and a healthy number of closes to 129 closures, which was actually healthy for the industry because the ETFs that were liquidated, they had just failed to resonate with investors. They failed to gather assets, so that's good for the industry if the ones that are not resonating with the investors, they close down.
Clean out the dead wood.
Yeah, right. And the ones that made their debut last year, we saw some very interesting ones, both from established providers as well as from very new providers too. And the two biggest launches last year were ESG ETFs, and we talked about some ESG ETFs in a recent video. These two ETFs, USSG and SUSL, they gathered more than $1 billion within weeks of their launch, but a lot of that money came from a Finnish pension company. So a lot of institutional money. But in general, ESG ETFs are becoming very popular. We saw very interesting themed ETFs, ETFs focused on space, one of which we discussed recently, ETFs focused on veganism, cannabis. There were 5 cannabis ETF launches last year, but of course cannabis was not hot. Because cannabis stocks plunged last year. ETFs that focus on 5G and quantum computing. The 4 that we are discussing today are, in my view, very interesting ETFs.
Are they from any of those categories?
Yes, some of them.
Okay.
Yes.
Let's take a look. You've got 4 of them here, starting with Defiance Next Generation Connectivity ETF.
The ticker symbol is very interesting, 5G, easy to remember too.
Yeah.
It's the first 5G focused ETF, made its debut in March last year. Now, 5G is going to change the way we work, the way we commute and everything. It's going to change the world because it is going to offer speeds up to 100 times as fast as the current 4G. But investors should remember that 5G may not become mainstream for the next couple of years because the rollout is slowly starting and phone companies are introducing new 5G phones, etc. So because of this hot theme, this ETF gathered more than 200 million in assets very quickly. Very reasonably priced too, with 30 basis points expense ratio for a themed ETF. That is very reasonable. Let's take a look at this ETF by going to the quote page on Zacks.com, and from there the external home page. So as it holds companies that may benefit from growing adoption of 5G technologies. So it holds telecom providers, it holds chip manufacturers, it holds phone manufacturers, and also REITs, which will operate cell phone towers, etc.
Sure.
So top holdings in the ETF are Nokia, NXP Semiconductors, Qualcomm, Analog Devices, and Ericsson.
Okay. How about the Global X Cloud Computing ETF?
The ticker symbol is CLOW. It holds companies that are benefiting from increased adoption of cloud computing technologies.
Sure.
So what is interesting about this ETF, that earlier ETF, cloud computing ETF, that had a lot of exposure to cloud computing giants like Microsoft, Amazon, and Alphabet. Now those companies, they are leaders in cloud, but they are not pure play cloud companies because they have so many other revenue streams. So this provides pure play cloud exposure, made its debut in April last year. It holds mainly companies that derive more than 50% of their revenues from cloud-related activities. It also holds those tech giants that I mentioned, but their exposure is capped at 10% total. This was one of the most successful ETF launches of last year. It gathered almost $500 million within a few months. Charges 68 basis points. Again, to learn more about this ETF, you can go to the quote page and the external home page. I also did a podcast on this ETF and the other ETF too. And if you look at the holdings, pure play cloud computing companies like Paycom, Shopify, Paylocity, Twilio, Zscaler, these are the top holdings.
Then there's the Freedom 100 Emerging Markets ETF.
So anyone looking to invest in emerging markets, and for some reason if you want to avoid countries that do not respect human freedoms, then this is the ETF for you. Very innovative ETF. It uses a freedom weighting methodology. So countries that support life, liberty, and property rights, they get exposure in this ETF. And the countries that do not, they are excluded. So it holds 100 emerging market stocks from 10 countries. So first it selects countries that value those freedoms, and then from each country, 10 stocks, 10 most liquid stocks are selected. Relatively small, just 15 million so far, charges 49 basis points.
It's interesting.
It's a very interesting concept. So to take a look at the ETF, you can go to the quote page, external home page, and you can look at the holdings and other details for this ETF. So Taiwan Semiconductors is the top holding. Then you get Samsung Electronics in the ETF. And in terms of country exposure, Taiwan and South Korea are the top countries. Now in most emerging market ETFs, China accounts for almost 35% of the portfolio. This ETF does not provide any exposure to China. This does not have China. So if for any reason, because of the human rights records or because of the new virus fears, which is going to really impact the Chinese economy, if you want to avoid China, then this is worth a look.
All right, finally, ProShares SMP Technology Dividend Aristocrats ETF.
So ProShares is known for their leverage and inverse ETFs, but they have a very good suite of dividend growers ETFs too. Now this ETF that they launched last year, it focuses on technology companies that have been growing their dividends for at least 7 years. Now most dividend ETFs, they have a backward-looking screen. So companies that have been growing their dividends for 10, 15, 20 years. Now you know that technology companies started paying dividends only recently, most technology companies. So many of those screens miss tech companies. This holds technology companies which are now paying dividends, and these companies are growing their dividends. They are among the top performers in the market for the last decade or so. So you get a good exposure to those healthy, cash flow rich tech companies.
That's what we want. Healthy, cash flow rich.
Yes, it has gathered 26 million in assets so far, though it is pretty new. To take a look at the ETF, you can go to the quote page and external home page. And if you look at the holdings, you will see well-known technology companies that pay a dividend: Microsoft, IBM, Accenture, Visa, MasterCard. Apple is not there in the portfolio as of now because they launched their dividend, relaunched their dividend in 2012. But I understand at the time of next rebalancing, they will include Apple too, because then Apple will probably satisfy that 7-year criteria.
All right, and these are too new, so there's no comparison.
I don't have a competitive charge because they are very new. Their inception dates are different, and they are in very different fields too.
Right. Okay, but do you own any of them?
So I own the cloud computing ETF in the ETF investor portfolio.
All right. Well, thanks for that. I'm sure you'll keep your eye on these as they progress. And don't forget, there's always more ETF information, and that's on our website, Zacks.com. It's in the ETF section of the website. Use the Funds tab in the top toolbar to help guide you there. You heard Nina mention her podcast, ETF Spotlight. She produces a new one each week and hosts it as well. And she's just recently back from an ETF conference. And so I'm sure that in the weeks ahead, months ahead, you'll be hearing guests on that podcast who she met up with at this conference. You want to keep your ears peeled for that. Go to the podcast section of Zacks.com. Go down to the bottom of the homepage, click on the word podcast to help guide you there. You can get advance notice, by the way, of positive earnings surprises from Zacks. Zacks research breakthrough now predicting with near 80% accuracy which stocks are going to beat earnings expectations even before the reports are issued to the public. And so to find out which ones they are currently, go to Zacks.com/promo. That's where you get more details. With Nina, I'm Terry Ruffalo.